Bitcoin is sitting in one of those uncomfortable zones where the chart does not look weak enough to call a clean breakdown, but it also does not look strong enough to call a fresh trend. Around 60-4300, the market is firm, yet the energy behind the move still feels limited. That is why the more balanced read here is neutral. Not bearish panic, not bullish confirmation, but a market waiting for proof. The bigger background is still heavy. Geopolitical risk has not fully disappeared, and the shock from the semiconductor-related sell-off has kept risk assets more cautious than excited. At the same time, trading volume and investor sentiment appear compressed, which often creates a market that moves sideways, even when everyone is expecting a dramatic move. The fear and greed gauge is moving through extreme fear territory, which tells us that the crowd is not exactly confident. But extreme fear by itself does not automatically create a bottom. Sometimes it marks exhaustion, and sometimes it simply stays fearful, while price keeps grinding lower. So it has to be read together with the chart structure. The cleanest level on the downside is 61,000. This area matters because the lower side of the current structure has already acted as support several times, meaning buyers have stepped in there before. If price returns to 61,000, the question is not just whether it touches the line, but whether buyers can defend it with real follow-through. On the upside, Bitcoin is also pressing against a resistance zone that has rejected price twice. There is no need to overcomplicate that. When the market fails at the same upper line more than once, traders start watching it as a ceiling. Until that ceiling is clearly reclaimed, the sideways range remains the safer interpretation. One useful way to describe the current chart is compression. Price is moving between a rising support area and an upper resistance area, creating a narrowing range. In past markets, this kind of squeeze often led to upside when it matured fully. But when price slipped out of the structure early, the downside move could become sharper. For the bullish case, Bitcoin needs to do more than drift higher. A stronger signal would be a break above the previous rebound high that started from June 7th, because that would show that buyers are not only defending lows, but also taking back higher ground. Without that confirmation, the move can still be described as firm sideways action rather than a decisive breakout. The bearish case starts to matter if the recent low gives way. The reason is simple. Bitcoin has been making slightly higher highs and slightly higher lows, but the slope is not very strong. If the prior low breaks, that fragile stair-step pattern can quickly lose credibility, and traders may start looking for deeper downside rather than another small bounce. This is also where 61,000 becomes important again. If a short-term support break begins to threaten the longer-term support structure, the market could move from calm sideways trading into a much more defensive phase. In that situation, risk control matters more than trying to guess the exact bottom. There is an interesting long-term argument as well. Bitcoin is trading near the 200-week moving average, which is the average price line over roughly the last 200 weeks, and is often watched as a long-cycle support zone. Some long-term traders view that area as attractive, but even near a major average, price can still overshoot lower before a real recovery begins. Another longer-term observation comes from the relationship between the 20-week and 60-week moving averages. When the shorter weekly average sits below the longer weekly average, it shows that medium-term momentum is still lagging, and past examples sometimes appeared near major bottoms. But that is not a guarantee. It can also mean the market is still weak enough to retest lower areas first. The 100-day moving average, meaning the average price over the last 100 trading days, is another area traders are watching for a change in behavior. In previous attempts, Bitcoin either turned down quickly or produced a brief false breakout before fading. This time, the open question is whether the market can show a different pattern by holding above it with conviction instead of slipping back immediately. There is also a shorter-term warning from the 20-day moving average, which is the average price line over about 1 month of trading. As that line continues rising while candles stall, Bitcoin may be forced into another retest. A bounce from that area would support the sideways to firm view, but a clean loss of it would increase the risk that the current calm is only temporary. The opposite interpretation should not be ignored. Some traders argue that repeated tests of short-term support have already weakened the old breakdown count, because Bitcoin bounced after another test rather than rolling over immediately. Others still see the long-term cycle as alive, but they also leave room for another low before the market forms a more convincing base. So the practical read is this. Bitcoin is not giving a clean all-in bullish signal, but it is also not collapsing through support right now. The chart is balanced between a narrowing range, weak sentiment, long-term support arguments, and the risk of a deeper drop if key lows fail. The next meaningful move likely comes from confirmation, not from guessing inside the middle of the range. This narration is for market commentary and educational reference only. It is not financial advice, and it is not a recommendation to buy, sell, or open any position. Always manage risk carefully and make decisions based on your own plan, time horizon, and research.